Welcome dear learner. Now we are taking the 7th module and today we'll going with second lecture of this particular module, and in today's session we will discuss the nature of transaction. So with going into detail the nature of transaction, just have a rewind to you about the previous lecture where we have discussed that combination is a term which refers under section 5 of the Competition Act in India and which specify or which refer with the any type of merger, amalgamation, acquisition or any type of the things. Section 5 states that combination that exceed the threshold limit specified in the Act in terms of assets or turnover, which causes or likely to cause appreciable adverse impact on competition within the relevant market in India, can be scrutinized by the CCI. The threshold limit are specified in terms of assets and turnover. The threshold limit are different according to whether the combination involve enterprise, group and also whether the combination assets or turnover only in India or worldwide. That means section 5 in last session we have discussed is about the term combination, which includes the acquisition, merger, amalgamation or if a person or a group or enterprises took share or the holding on the assets of other enterprises. There is a requirement in the enterprise exceed any threshold limit which is prescribed by the Act in terms of the assets or turnover. The combination may be scrutinized by the CCI. That means it is the established fact that for the purpose of the scrutinization of such combination, there are two key elements which is important. First, the nature of the transaction, because combination is a defined term under section 5. That means the nature of transaction which may be scrutinized must be comes within the meaning of section 5 under the definition of combination. So the nature of transaction is important, and if such activity comes within the meaning of terms combination what is given under the term at section 5, then the CCI may look into the value involved of transaction, so that if it found that there are certain threshold limit and such the nature of transaction exceeds such threshold limit, the matter may be taken up. So for this purpose, today we will going into detail with the nature of transaction. What is nature of transaction under section 5? For that purpose, you have to refer the meaning of combination which is given under section 5, and combination under section 5 acts includes three type of transaction. First, acquisition. Second, acquiring of control by one person over an enterprise. Third, merger and amalgamation. So start with the meaning of acquisition. What is acquisition actually? Section 5, if you see, the term acquisition is used, but there is also it is defined under definition clause within the section 2 subclause A. Under section 2A of the Competition Act of India, the term acquisition is defined as follows. Acquisition means directly or indirectly acquiring or agreeing to acquire by shares, voting rights or assets of an enterprise, control over management or control over the assets of an enterprise. So this definition is broad and encompasses both direct and indirect form of acquisition. Focusing on the transfer of ownership or control over the enterprise's share, voting rights, assets or management. The Competition Act aims to regulate such acquisition to prevent any anti-competitive behavior which may lead to the adverse impact on competition within the market in India. That's why the term acquisition become important. Under this term, there is a term which has been used number of times, that is control. Control over the assets, control over the share, control over the enterprise. So what is control means? Control just not a literal English word what we have to go with this. Under the competition law or corporate law, word control has a distinct meaning. If you see the word control, it is not exhaustively defined under section 5. But section 2H of the Competition Act provides some clarity by defining an enterprise as one that includes entity exercising control over another. The CCI and judicial interpretation have further elaborated the meaning of control. So as per the Act, control includes controlling the affair and management of an enterprise, that is by holding the majority share or voting rights. The ability to appoint a majority of directors and the ability to influence management or policy decision. If you see the explanation given under section 5, the explanation states that, and it clarifies, the control includes positive control as well as negative control. Positive control means direct influence over management or decision, that is like through shareholders or voting rights or veto rights, you can say. And the negative control is the ability to block key decisions like veto power over strategic matter like budget, business plan or any key appointments. So CCI has adopted a broad and practical approach to control, and it considers both de jure, that is legal, and factorial, that is practical control. For instance, even a minor shareholder may be deemed to have in control if they can influence a key commercial strategic decision such as approving budget, business plan or appointment of senior management. There is certain case where you have to look as illustrative. That is like in the case of Jet Etihad acquisition in 2013, the CCI held that control could arise from a special right in agreement, like broader representation to veto rights. Even without majority ownership, the Supreme Court of India and Competition Commission Appellate Tribunal, that is COMPAT, which is now become the NCLAT, have emphasized that control must be assessed on case-by-case basis. And in Ultratech Cement versus CCI in 2018, the Supreme Court clarified that control involved the ability to exercise decisive influence over the management or affair of the enterprise. There are certain specific types of control you can see, like the sole control, joint control, material influence. What is sole control? Sole control is like one entity has ability to unilaterally determine the strategic direction of the enterprise. Joint control, where two or more enterprises have ability to influence the key decisions, often seen in joint venture, where veto right or equal broad representation ensures shared decisions market. The material influence is like a lower threshold where an entity can impact a strategic decision without full control recognized by the CCI in very important cases like Reliance and Disney 2014. It is an illustrative case only. You may refer this for the purpose of understanding of such type of material influence. Now the second thing is the acquisition of control by a person over an enterprise. If you see the section 5 refer to the combination, and the meaning of combination is stated as any acquisition, the acquisition of control by enterprise over enterprise, and merger and amalgamation. Means what we are discussing in this particular session, that there are two key elements where we have to focus. First, the nature of transaction, then the threshold limit or value. What is nature of transaction? Nature of transaction means what are the nature of transaction, that means the transaction for what the company is or enterprise is taking deal, which come or may not come in the required term of combination. So that the nature of combination must be three types. First, acquisition, what we have discussed. The second is the acquisition of control by person or an enterprise. So for this, the meaning of the acquisition of control by person over an enterprise, here acquiring control refer to the ability of person, whether it is individual or entity, to influence or direct the management, affair or policy decision for enterprise. And this control can be exercised directly or indirectly, and it may be achieved through various means such as shareholding, voting rights, management right, contractual agreement or the other type of agreement. So where does it apply? What we are saying that 5B just for the purpose of the categorization, there is nothing like 5A, 5B, 5C under this section, but section 5 is about the three key elements, and the key elements are like acquisition, the acquisition of control by a person over the enterprise, and third is merger and amalgamation. So in this context, we have categorized the 3 points, and now we are considering the second, that is acquisition of control by the person over an enterprises, and here the question is where it does apply. Section 5B, like what we are dealing particularly, applies when a person acquires control over an enterprise either directly or indirectly, and such acquisition meets certain threshold, which includes the acquisition result in acquiring, gaining control over the enterprise business, decision, management or affair, and the acquisition crosses certain assets or threshold limit which is specified by this act. So in this scenario, this particular category may be applied. Now the third category is under the meaning of the combination is merger or amalgamation or merger and amalgamation. Basically both terms, whether it is merger or amalgamation, have not defined under this act. Even in corporate law, merger and amalgamation have distinct meaning. However, the amalgamation is a term, or the merger when took place may refer for the purpose of levying the taxes under the Income Tax Act. But for this purpose, that means for the purpose of restructuring under what we are saying under the meaning of the combination, these terms are not definable. But under the corporate law, what we are discussing, that there are certain and exclusive meaning of the term like the merger and amalgamation. So just look the meaning of the merger. What is merger actually? A merger is a corporate transaction where two or more enterprises combine to form a single entity, with one of the original entity ceasing to exist independently. And it typically involves one enterprise absorbing another or both merging to form a new entity. That means the act does not explicitly define the merger, whether it is in section 2 or section 5. However, under section 5C, a merger is understood as a combination where enterprise unite, resulting in a single legal entity which could affect the market potentially and the competition in India or in relevant market. So in corporate law, whether it is like the Companies Act or the SEBI or related rules, and particularly in the Companies Act 2013 under section 230 and 232, a merger involves the transfer of assets, liability or operation from one corporation to or company to another, that is surviving company or the creation of a new entity. That means in this scenario, under the merger section, one entity may survive, that is absorption, or new entity may be formed, that is consolidation. Merger are driven by the objective like achieving economic scale, expanding market share, or diversifying operations. And under the competition law, CCI focuses whether the merger cause an appreciable adverse impact on competition in India or not. So, on this issue, the merger and amalgamation or the concept of merger and amalgamation become important to regulate any type of the activity which is in the form of restructuring may appreciably adverse on the market in competition within India. Now, what we are discussing, merger and amalgamation, both are the terms which can be used simultaneously, but both have the different meaning. What we have discussed merger, again if you see the meaning of the amalgamation, amalgamation is also a word which has not been defined even in section 2 or section 5 or anywhere in this act. But if there are two or more enterprises combining and form a new legal entity, and all original enterprises cease to exist. This is the basic difference between what we are discussing, what we have discussed the meaning of merger and in the amalgamation. That means in the case of amalgamation, it involves pooling assets, liability and operation into a distinct entity. Like merger, amalgamation is not explicitly defined in this act or anywhere in this act. But in corporate law, amalgamation, that is as per Companies Act, refer to the process where two or more companies dissolve and their assets and liability are transferred to a newly formed entity, with shareholders receiving shares in new entity. That means the amalgamation or the process of amalgamation always resulted into the formation of new entity, and the original enterprise lost the legal existence, and the common for consolidating resources or rebranding under the unified structure. So, this is the subject under the scrutiny of the CCI, whether it is have some or it has some appreciable adverse impact on competition within India or not. Now, what we have discussed the meaning of merger, meaning of amalgamation, what the important thing is under the category section 5, what we are dealing for the purpose of this academic discourse, that the merger and amalgamation have the equal footing. But definitely there is a difference, and merger is very much different from the amalgamation, and the distinction is like you can trace merger may involve the absorption where one company survive or consolidation and a new entity is formed. And under the amalgamation always involve forming a new entity with all original entity dissolving. So that under Competition Act both are treated as combination under section 5, with the CCI focusing on their competitive impact rather than these type of any technical difference. So, what are the acquisition, what is the merger and what is the amalgamation? We may trace the differences by some examples just for the understanding of this concept. Let us see one example of in trial scenario. What is acquisition, what is merger and what is amalgamation. Let us start with the meaning of the acquisition, what we have discussed. Just take an example. Suppose Tata Steel acquiring 51% stake in Bhushan Steel. In this case, Tata Steel is acquiring over Bhushan Steel's business and asset, and this process is called acquisition. Merger is like, suppose HDFC Bank or any other bank, this is just for illustration, for the understanding an example what we are understanding here. Suppose HDFC Bank merging with Centurion Bank of Punjab, and in this case the two banks are combining to form a new entity with the resultant entity being one of the merged bank. And amalgamation is like Suppose Glaxo India amalgamating with Broad Welcome, that Indian company. In this case, the two companies are combining to form a single entity with one company, Glaxo India, potentially absorbing the other. So these example illustrate the different type of combination that fall under the section 5 of the Competition Act, and the key aspect is resulting changes in control, asset or business or operation. Now, what type of merger and amalgamation? If you see, there are generally three type of merger and amalgamation. The merger and amalgamation are classified based on the market relationship between the combining enterprises. The types and the relevant under the Competition Act because they determine the potential impact on competition, so that on that purpose it may be categorized as horizontal merger or amalgamation, and which is more likely to reduce the competition, and there are one more type, that is vertical merger and conglomerate merger. So what is the meaning of horizontal merger or horizontal amalgamation? In these type of the merger, the parties to combine are involved in the production of similar level of goods or service. If you remember, under the third and fourth module, when we were discussing the meaning of the dominancy of enterprise and particularly the agreement, we have discussed there are two type of agreement, vertical agreement and horizontal agreement. Vertical agreement, if you remember, if the agreement involved at the different level, and a horizontal agreement is a agreement where in a different food chain the enterprise involved with the equal, that means the equal level. On the same term, here the meaning of the horizontal merger and amalgamation merger is more like that, where the production of the similar goods or services, for example, two cement manufacturers company, and in such case are involved at the manufacturer level, that is like the horizontal. So there is a definite lessening the competition. Therefore, what is important to find whether there is likely to have appreciable adverse impact of not. This is the scrutiny which may have been done by the CCI for that purpose, and the analysis of such transaction require the detailed consideration of unilateral and coordinate effect, stability and analysis efficiency gained it occur when the enterprise or operation at the same level in value chain producing the identical or substantial goods or service. If you see the impact on competition, this is high potential of appreciable adverse impact and may reduce the competition, which increase the market share. Now just take an example. Two cements manufacturer company A and B merge with a company B, merging into the company A. Company A survive, controlling a larger share of the cement market. And just for the sake of the example as an amalgamation, two telecom operator company X and Y amalgamate to form a new entity, company Z, combating their network at customer basis. The second important aspect, that is vertical merger or amalgamation. It occurs between the enterprise at different level of supply chain, where one provides input or service to the other, that is manufacturer and a distributor. For example, in both cases, let's start with the merger. A car manufacturer company B merge with a tire supplier company Q. With company Q merging into company P, this allow company P to control tire supply for its vehicle. And amalgamation is like where a pharmaceutical company, company R, and a drug distributor company S amalgamate to form a company T. So streamline production and distribution. These are the important example of merger and amalgamation in the case of vertical and horizontal. Now the third aspect is like the conglomerate merger. Conglomerate merger or amalgamation is like it occurs between the enterprise when the transaction is very much unrelated, that is within the unrelated business. For example, a tech company M merge with a food processing company N, with company N merging into company M, diversifying company's portfolio. There is no relation, there is no business relation between the tech company and the company of fooding. And this is like in the case of amalgamation, you may take one example, like where an insurance company and a real estate company come together and amalgamate and form a company W. So combining unrelated competition, and the impact is like very negligible, or this is under the scrutiny, but it has very less adverse impact on competition. Now, threshold limit for regulation of combination, which comes within the meaning of section 5. The threshold applied to combination under section 5A in the case of acquisition of control, share voting right of action. In case of acquisition of control by person already controlling similar enterprise, in the case of merger and amalgamation. But these limits are divided into enterprise level and group level with separate criteria of India specific or global specific. We will discuss that in next lecture. So for today, this session, dear learner, there are 1 or 2 self-assessment questions for you which will help you to identify the nature of combination, whether it is merger or amalgamation. And the test is, suppose company A and B combining to form a new entity, company C. The resulting company is new company with its own identity. This is to you to identify the nature. One more illustration, company X absorb company Y and the company Y ceases to exist. Company X continue to operate with the assets and liability in company Y. And the third scenario is two companies P and Q combine and one of the companies retain its identity and absorb the other company. So in cases, in this scenario, you have to identify whether this is like merger or amalgamation. So with this, I am leaving this session for today, and in next session, we will discuss the threshold limit or value where the notification of combination is applicable. So for this session, thank you.